You say that the A-share performance will largely be driven certainly by the upcoming results season, but what opportunities in terms of the sectors do you perhaps see when it comes to the Chinese equity markets in this common prosperity theme that the Chinese government is pushing at the moment?
Well, there are a few segments that we expect it's a pretty good result. First is the Chinese staples. And in fact, back to your theme about common prosperity, I mean, these are the sort of something necessity that people need. It's not about, luxuries or discretionary items. And in fact, in the last month or so, we start to see a lot of the stable companies managed to raise prices, but not a lot of pushback from the market response. So they're going to give you pretty good results in terms of expansion in margins. Apart from that, I think we need to focus on what the Chinese government, focus on in terms of prosperity. Like, carbon neutrality is still the long-term target. As a result, the medium to longer term, we're still positive on renewable energy, EV, battery supply chain. I know that it has been, hit lately because of, they are the part of the growth segment and they are under pressure. But I think medium to long term, this is still where the policy focus is.
And I don't know if you heard me just earlier, I was talking about, of course, the smaller Chinese companies still going for it in the US, even as we have seen things, going a little bit quiet off the back of the Didi episode. What does the likes of Meihua and Lian Bio tell you about what this space might look like going forward, given we still have the issue of the Chinese regulators not allowing the access to the Chinese books of the US auditors, and of course these homecomings that we have seen to the Hong Kong and Chinese markets off the back of this?
Frankly, I'm surprised too. I mean, given if you look at how the development is, we expect the U.S. government, after this round of results season, they will give a list of companies that more or less, cannot say warning, but a sort of a statement that if these companies are not able to give them the audit records at a certain time, which is, we're talking about based on the current juncture, around 3 years from now, which is around 2023, if they fail to give it, they probably need to be delisted from the U.S. market. So I think the homecoming trend is still continuing, and we do expect more of these U.S. ADR or sort of these Chinese companies listed in U.S. will seek for secondary listing in Hong Kong or in China, to prepare for the potential delistings in 2 to 3 years' time.